So we welcome you all. On behalf of the Bombay Chamber of Commerce and Industry, I, Utkarsh Joshi, would like to extend a warm welcome to one and all present over here. The topic for today's conclave is catalyzing capital formation for a Viksit Bharat. India's mutual fund industry, with AUM crossing INR 60 trillion, has become a cornerstone of the country's financial ecosystem. As India advances towards its vision of Viksit Bharat by 2047, mutual funds are poised to play a pivotal role in mobilizing household and institutional savings, deepening capital markets, and fueling the economic growth. This high impact conclave has been thoughtfully curated to unpack these developments and ignite meaningful conversations around building a resilient, inclusive, and future ready mutual fund ecosystem in India. As we all know, just as God of Cricket and the Master Blaster has reminded us through mutual fund Sahi Hai that smart choices build winning innings, today's conclave is about carrying that spirit forward, investing wisely, nurturing trust, and creating long-term value for all. Let us now begin a day of insight and thought-provoking discussions. I would like to request Mr. Sandeep Khosla, Director in General, Bombay Chamber of Commerce, to please present a welcome address.
Thank you, Utkarsh. Good afternoon to everyone. I hope you all had a nice lunch. Before we begin, may I request all of you to just put your right hand up. All of you, please, those who have mobile. Now the left one as well. And clap as hard as you can. So that's for the heavy lunch. So this will keep you awake. Because you're in for a very, very exciting 3.5 hours of very informative discussion on an industry which is growing, which is very dear to the Bombay Chamber. One of our past presidents is Nilesh Bhai from Kotak Asset Management. Two of the current board members are all into mutual funds. So for this, we have a lot of intellect within the chamber itself. We slightly delayed for a couple of reasons. One is that we were expecting Mr. Manoj Kumar to come. We just received message that he's held up somewhere and he won't be able to come. And Mr. Munot again has been called somewhere, so he sent us a recorded message. But Nilesh Bhai is coming after a few minutes. At Bombay Chamber, let me also remind all those who might not know, in the next 1 month, we celebrate our 190th Foundation Day, 190. So we've certainly been around for a long time, and it's because of members like you all, where our knowledge keeps on getting updated every few years. All those who are not members, we would request you to become a member of the Bombay Chamber. We keep on doing roughly 120 odd events a year, and each area is tackled. We are industry agnostic, so we have all industries as well as functions which we cover very thoroughly. In the morning, we had a very detailed discussion on circular economy under our sustainability committee. In the evening, there's an executive director of SEBI coming in, where we are discussing some of the LODR rules. So anyone who's interested in that could stay back and join us in the evening session. Even when the Prime Minister recently went for his G20 visit to Canada, before that he stopped at Cyprus. Bombay Chamber is the only chamber which was invited, and our then President Pinky Mehta represented the chamber. So, we are in the process of not only looking at traditional areas like taxation, legal, which have been around for a lot of years, but concentrating on whatever new technologies come in. We are always at the forefront. Sustainability is very, very important for us. D&I is very important for us. And we try and ensure that whatever new changes happen, the Bombay Chamber would be the first one to break it down for its members. We certainly interact a lot with both the Government of India, Government of Maharashtra, as well as the regulators. So any query you have, any representation you want for the Government of India or various ministries, Bombay Chamber is always there. In case you're a member, you send representations to us. Any particular thing which you believe either needs to be communicated to SEBI or to RBI or any of the ministries. My special thanks to our sponsors, premium sponsor, Kotak Mutual Fund, HDFC Mutual Fund, Axis Mutual Fund, UTI Mutual Fund, SBI Mutual Fund, Mirae Mutual Fund, and Aditya Birla Capital, and HDFC Securities. Without this, we wouldn't be able to do justice to an event like this. So thank you all once again for being here, and I hope this is an exciting session. Please make it as interactive as possible. At the end of the session, we will have some question and answer session. So thank you once again.
Thank you, sir. As our Director General, Mr. Sanvi Khosla, said, unfortunately, Mr. Navneet Munot could not be present at today's conclave, owing to his prior commitments and last-minute traveling schedules. However, he has graciously shared a video message with us that we briefly set the theme for today's conclave, reflecting his deep affection and continued support for the Bombay Chamber's work. Can we have, please, the video?
It is truly a pleasure to be here among colleagues, policymakers, partners, and friends who have all contributed to India's remarkable journey in the mutual fund industry. On behalf of the Bombay Chamber of Commerce and Industry, once again, I welcome you all. The theme today, catalyzing capital formation for a Viksit Bharat, beautifully captures both the opportunity and the responsibility that lies before us. When we speak of a Viksit Bharat, we are not just talking about higher GDP numbers or faster growth. We're talking about a nation that is inclusive and self-reliant, a nation that gives every citizen a stake in its prosperity. In a challenging global environment, India's economy has done remarkably well. Credit to our policy prudence, to agile execution, and of course, very importantly, resilience of domestic investors. Our growth is strong, our inflation is well managed, and our macroeconomic foundations are very stable. Few nations in the world could ever combine the kind of political, social, macroeconomic, and financial stability that we can boast of. This decade will be a defining one. Formalization of the economy, digitalization of the economy, digitalization of finance, financialization of savings, and financialization of assets, something that doesn't get talked about as much. All of these are powerful forces that will create new opportunities as we progress towards a Viksit Bharat. For generations, India has been a nation of savers. That instinct of frugality, that instinct for savings run very deep in our culture. And now we are witnessing a profound transformation of India moving from a nation of savers to a nation of investors. And this change is not just financial, it is social and cultural. It reflects growing optimism, aspiration, and belief in India's future. And this shift is not confined to the metro cities and larger cities anymore. In our industry parlance, what we call B30, beyond top 30 towns, now contribute almost 60% of the new SIPs. In terms of count, 60% of new SIPs are coming from B30 towns. And we are interestingly seeing more participation from women investors, from younger investors, so from different cohorts. We are seeing participation who have hitherto not participated in financial markets. Our per capita GDP stands at an inflection point, and we have seen globally, whenever a country crosses $2,500–3,000 per capita, their consumption and savings behavior change meaningfully. As incomes rise, as aspirations grow, the need for investment solutions that are simple, that are transparent and trustworthy will multiply. And our industry is uniquely positioned to serve that need of each and every Indian household. On Independence Day, our Honorable Prime Minister reiterated the vision of Viksit Bharat, built on the pillars of Atmanirbhar Bharat and built on the pillars of an inclusive growth. And our industry is deeply committed to those goals, both a Viksit Bharat and an Atmanirbhar Bharat. Since 2021, mutual funds collectively have invested more than $175 billion, $175 billion in equity markets. The continuous SIP flows have helped India in reducing its vulnerability on global flows, on global capital movements, making our markets truly Atmanirbhar. And this has led to a remarkable transformation. As you know, for longest of time, our markets were driven largely by foreign flows, and today that has changed. If you look at the monthly flows of 29,000 crores of SIP flows that's been coming every month, and if you look at the yearly run rate, that would be almost $39-40 billion a year. And this is bigger than what foreign investors would have put in any single year in history so far. So this is a structural shift in India's financial landscape. This is also leading to a very robust primary market. Raising money for all kinds of entrepreneurs is getting easier. Domestic investors are no longer passengers in India's journey. They are now co-pilots. And mutual fund industry has become the bridge that connects Bharat's savings with India's growth. So on one side, we are channeling household savings into capital formation and supporting the economic growth on our journey towards Viksit Bharat. And on the other, we are making that growth more inclusive by giving millions of Indians an opportunity to participate in the progress through their investments, small investments that come in the form of SIPs every month. So this is the silent revolution, the financialization of savings, movement from physical to financial, from short-term speculation to long-term wealth creation, from fear of markets to faith in disciplined investing. The 75 lakh crore AUM is equivalent to around $850 billion. And at current pace, we are nearing $1 trillion in asset. But more than the size, what is truly extraordinary is the quality of this growth. The deepening of trust, the broadening of participation, and the maturity that our retail investors have shown, the individual investors have shown over the last several years. And the foundation of this growth and acceptance of mutual funds, I always say, can be attributed to what I call the 4T track record, the long-term track record of funds. Transparency, which I think our industry has worked very closely with regulator, and a lot of credit to the regulator and the industry body. The third is the technology, leveraging on the power of digital public infrastructure. And fourth T, just to complete the acronym, is the training, which essentially is investor education, investor awareness programs that we have been running. And with these 4 T's, track record, transparency, technology, and training, trust has been earned, and it has been built slowly through decades of disciplined stewardship and integrity, decades of hard work by everyone in the industry. I always say managing someone else's money is a very noble job. It's not just a financial responsibility; it is a moral one. Our profession is a very noble profession, and our true success is not measured by the assets we manage, but by the faith that millions of investors place in us day in and day out. Our markets today, thanks to SEBI's consultative approach, co-creation approach, are among the most robust and best regulated in the world, and all of us take a lot of pride in that. And the unwavering focus of SEBI and along with that of the industry on investor protection, on market regulation and development has kept us in good stead. Our financial system is deepening, our digital infrastructure is world class, and our investors are maturing with every passing year. And as we look ahead, I'm sure the coming decade, the coming 25 years will bring both opportunity and responsibility in equal measure. We are celebrating industry numbers that were unthinkable even a few years ago, but we all know that this is just the beginning. Our journey is far from over. The years, or rather the decades ahead us, will demand vision, resilience, and responsibility in equal measure. Mahatma Gandhi famously said The future depends on what we do today. The future depends on what we do today. If we continue to work with the same noble mission that finance must ultimately serve the good of society, the larger good of society, then our future is infinitely promising. Today I say this with confidence as well as humility that our industry stands ready to contribute to the Prime Minister's vision of a Viksit Bharat by 2047. We will work continuously to ensure that this growth is inclusive. By elevating transparency, by strengthening trust, by embracing technology and expanding financial inclusion, always keeping the investor at the heart of everything that we do. Thank you once again. Jai Hind.
Hello. I hope the pointers were quite insightful. We are very grateful for the support of Mr. Munot. Unfortunately, our keynote speaker, Shri Manoj Kumar, Executive Director SEBI, could not be present at today's conclave due to his last-minute board meeting. However, he has conveyed his best wishes for the event. Moving forward, our first panel discussion is on the topic Mutual Funds Mobilizing Savings from Bharat. For that, I would like to invite our moderator, Neil Borate, Editor-in-Chief, thefynprint, and our panelists, Madhu Lunawat, Founder and CEO, the Wealth Company Asset Management, Swarup Anand Mohanty, Vice Chairman and CEO, Mirae Asset Investment Managers Private Limited, Chitra Iyer, CEO, MFA Capital, and Rishi Kohli, Chief Investment Officer, JioBlackRock Mutual Fund, to please join us on the dais. A big round of applause for all our panelists.
Hello, everyone. So, I'm always terrified of a post-lunch session because everyone gets this drowsiness going. So, I'm going to state very clearly that the last 20 minutes are meant for all of you to ask questions. So, I want you to write down your questions as we speak, and hopefully that will at least keep you awake as we get going. So, the topic before us is actually something that's been discussed for years in official bodies. I've also been an invitee to the SEBI, IEPF, where this gets discussed. And honestly, I haven't yet seen a solution. It's such a difficult thing to do because when we say that Bharat should be given mutual funds, should be investing in mutual funds, there is a cost to it. And the two can't be reconciled. How do you keep the cost at a level where it's still profitable and at the same time you broaden that distribution of mutual funds? And we'll go over that math, like what does it actually cost for an AMC for a 10,000 rupee SIP? Right? The average SIP is much below 10,000 rupees. So actually how that math works out is very interesting. Before we get to that, I'll first ask my panel about the products. So there is one idea that is it possible to have a set of low risk, easy to understand products which can be taken to Bharat with fewer regulations, with fewer of the constraints that apply to normal schemes. As you guys know, there are about 1,500 or so schemes and it's a jungle out there. But is it possible to identify such products and have them drive that distribution? So Madhu, can we begin with you?
Sure. So if you see our regulator, SEBI has given a lot of riskometers. And so riskometer mein, the moment you see dark orange and red, that actually shoos away your Bharat's investor. Secondly, we also need to see whom are we competing with there. When we move to the tier 3, tier 4 towns of India, cities of India, wahan pe we are fighting with the guaranteed products, number one. Number two, there even fixed deposit rates, because cooperatives are playing that role, is very high compared to metros. The FD rates I have seen goes as high as 9 to 10%. So considering these two factors, we believe we should offer products like equity savings, which gives almost equal or better returns compared to the FD rates which our investors are getting there. And secondly, I would look at products which are moderate and not have the orange and red kind of a riskometer, and with that line of mutual fund investments are subject to market risk. So that's where multi-asset allocation funds, because वहाँ पे gold and now REITs is a part of equity, so that that understanding, just समझाना easy रहता है. So I would say MAF and balance advantage, and third is equity savings will go with that.
Yeah, one interesting thing that happens when regulated products are not penetrated so much is that unregulated products creep in. We've seen this with digital gold. We've seen a warning from SEBI on this. Money that should have come to gold ETFs has gone there instead. And that's just the tip of the iceberg, right? We all know the kind of unregulated products that are constantly being sold throughout Bharat. On the one hand, there's crypto. On the other hand, there's digital gold. There's lotteries. There's so many things that really should not be given to retail investors, but just because it's hard for the regulated system to get there, that is what actually gets sold. So Rishi, if I can bring you in on the products argument, would you look at specific products for Bharat?
See, we are a new mutual fund, and for us, obviously the joint venture of JioBlackRock has been created with a primary goal of, financial literacy, financial inclusion across the length and breadth of the country. And therefore, for us, we started with what we call cash funds, which are simple, liquid money market overnight funds, because, as Madhu was saying, people in those areas, they are into fixed deposits, for example. Even otherwise, what Navneet was saying earlier about majority of India's being savers, right? So still you have 90% of the money in real estate, gold, and then fixed deposits, right? And a lot of that is what you want to come into the equity markets or into mutual funds per se to become, much more regulated, much more simpler way of investing. So I think the first step, if you think, as a rural investor, you're in a fixed deposit, you would first maybe try out these liquid and money market kind of simple fixed income products. It's a natural, transmission for you. Risks are not really much higher than what you're used to.
But
and then,
if I could quickly interrupt you on that, we've had a 5-year crazy bull market. Do you find a lot of people actually leaping more towards equity given the performance?
So, perfect. I was about to come to that. So, and post that, we've launched our simple index funds, right? And that, again, to a first-time investor in mutual funds who's not exposed, or first-time investor in equities, we can't really imagine they will start getting into active products and really understand the whole landscape and the risk reward that is there across different categories and even within categories in different funds. So again, for them to go from fixed deposits to some of these simple fixed income products to then go to index funds. And then as they get experience and comfort, to go into other more active funds, I think that is sort of the simple life cycle that one can relate to if one has not been an active investor. And that's exactly how sort of we've designed our product, suite to begin with. And then, of course, you will need to have active products and you will need to have many different categories to suit different asset allocation requirements. There, like recently we launched our first active systematic product in the equity category in FlexiCap. So we have come out with this concept called SAE, which is Systematic Active Equity, which BlackRock uses globally. Now, what is unique about that, without going into details on that concept, because, this is not the forum for that. But very interestingly, even in equity, even in the same category, let's say FlexiCap, to continue with the same example, all the funds in FlexiCap also have very different, risk profiles as such. So putting everything in the same category doesn't really give the information to first-time investors or early investors. So we have this concept that we call active risk, where we say that, okay, every long-only strategy will underperform at some point. But usually in India, what we've seen is that the best performing funds in their good times really hit the ball out of the park. They'll do 20-30% alpha in a year. But when times are tough for that strategy, then your negative alpha is also in double digits. Now for a retail investor or for a first-time investor or a rural investor, the more times you give that volatility of that underperformance in alpha and the higher that magnitude is, out of 5 times, 1 time, even people like you and me may take that decision to exit. And for those retail investors, definitely they'll take that decision. So the less opportunity you give them to take that decision, we believe that itself leads to a long-term compounding and automatically brings in discipline that you want to. Because otherwise, whether it's India data, global data, what you see is that in the best performing funds also a retail investor has made half the return or 2/3 of the return. That can get eliminated if that focus on risk comes in. So I think we talk very less about risk, and there's a lot more that needs to be done around education, around disclosing that kind of data, which can really help a lot.
So you prioritize consistency over hitting it out of the park.
And what our data shows is that if you have that consistency, you can still reach the top quartile. So, why do you want to do it with a much more volatile path?
Fair. Chitra, as a distributor, when you interact with what we can say Bharat, small towns, rural India, what feedback do you get? What kind of products do people want?
Yeah, thanks. In addition to what Madhu and Rishi said, and I'm sure Swarup will also continue in this direction, is that, see, one is, as he clearly said, yes, you are convincing a person who's coming out of the bank and you want them to be safe and you don't want them to get scared, okay, and you want them to see that their money is slowly inching up, perhaps just like FDs or like money sitting in the bank. And you start off with just complete low risk, and the way he explained there. But barring just the product talk, if we all of us together can talk about why are they saving, and you get in the goal conversation right up front, where you're able to, SIP is not a product, but SIP as a thought can be introduced to people to explain that, start monthly with so much and start, annually, or as you earn money, you set aside a 25% or whatever percentage out of what you earn. So I'm a strong believer that rather than just pushing products down anybody's, throat, we should take a conscious effort of explaining and helping that person articulate. And even from what are these people doing? Either they're getting scammed big time, because even in the lower population, as you see, there are so many of these bishy schemes to whatever else that is happening out there, where people lose a lot of their life savings. So helping them understand that, no, this is not where you will lose your money. This is where your principal will be intact. But you marry it with the risk, with the time. If that is something we can explain to people, then I feel all the products will, fall in line. We have so many products, but we need to marry that with the nature of what the person needs.
Yeah. No, I think distribution has been so successful in selling the idea of SIPs and SWPs that nowadays questions come like which SWP to choose rather than which fund to choose.
Yeah.
So, all right, Swarup, from your point of view, again, you've interacted for so many years with people across the country. What are these products and what should be focused on?
See, I think I'm so happy with what Chitra said, and take a leaf of that. So when you look at the financial wheel of, this is the financial data of an average Indian, he or she invests around 30 rupees in bank, FDs 32 rupees in gold, around 10 in equity, and then the balance in retirals. That is the risk profile on an average Indian. And we push down products before the person even starts investing. To come to product is probably the third or fourth stage. What is so critical in this country, and I'll not divide it into Bharat or non-Bharat, with 5-6% penetration, we actually don't exist in a person's life. The person does not have to be pursued to buy a new car, but has to be really pursued for the biggest need, that is the need of investing. That's where is the problem. And after 30 years, if I have to make this statement, I consider myself an absolute failure as a sales guy. I seem to be talking for 30 years and nobody is listening to me is a reality. Even from the basic concepts, when you are looking at a evolved level, you are now breaking down lump sum to SIPs, you are timing the market. That is how shallow we become day by day. The risk-taking ability is going down by the day. So when you want to really start penetrating, you have to talk their language. You have to go to them rather than they coming to us. And then you have to talk about what Chitra probably said is taking risks. I think after 10 years when gold is outperforming equity, whether it's still a hedge portfolio or not, I do not know. Right? Then probably the best way to reach an average Indian is through gold. My opinion, right? That's the asset class they really identify. The moment I say this, the strong bias of equity will come in. Kya baat kar raha hai yaar? Equity will outperform. The sales outperform nahi kiya hai. When all the rules are being underwritten and most of what we've said on the table in the last 10-15 years are already becoming wrong, it is not a bad time to go back to the table and revisit the whole thing and not break it down into Bharat. And I think there are enough people in Mumbai who do not invest and lead a very good life not investing in mutual funds, right? And that should worry us. Aisa kyun ho raha hai? Why is the person not feeling the need to invest at all? And feels the need to buy a new shoe every now and then, definitely feels the need to change his or her mobile phone every year. And that speaks of the collective effort that is in front of us. And that can happen when we bring our story to his or her story, rather than pushing down a product. Product bahut baad aayega, is my humble submission.
Swarup, on the example that you gave, if we can pick that up, if we make gold as the hero product, now we've seen what has happened, right?
Gold is not a hero product. For me, gold is a client acquisition product.
Fair.
That is the only product they learn, they understand, they identify with. हम लोग जो भी बोल दें, right? And at 10 years when gold is outperforming equity, what was the mistake? My mistake was not saying that equity is a growth asset class. The learned me stood up on certain bias, these kind of tables and said, equity is the only growth asset class. अभी मुझे नहीं पता मैं कहाँ छिपने वाला हूँ. And in this geopolitical nature of the world, that this gold binding will not continue. Somebody, I'm too small to conclude. But it's true that if I have to take one product to an average Indian, it is gold. And it's great that the regulator comes out and points out which is the right kind of gold to buy. And we happen to be the right kind of gold to buy.
Absolutely. But is there something that the regulator or industry can do in terms of easing people into a gold savings fund or a gold ETF? In terms of KYC, in terms of other cost of distribution, should something be done?
I know I will be pulled up by Navneet and all, but it is a fact that Gold Council puts up an ad of gold ETF, and AMFI is yet to put up an ad on gold ETF. That's where we can start, no? Gold, please understand, with all due respect, the Gold Council would have its own pressures of the jewelry shops and everything. To Dhanteras in continuity, they've put up gold ETF hoardings across the country. I think they have taken the mandate to sell our product rather than us is a fact, is a documented fact.
All right, let me turn to the second big arm or the second big leg of this argument, which is distribution. Because the fact of the matter is that distribution has costs and it doesn't work out for a lot of people when the client is too small, right? When you have even a 10,000 rupee SIP, right? Let's try to break down the math over there. Rishi, we can start with you because you guys have taken a very innovative digital approach where you don't need to have a big workforce on the ground. What are your marginal costs? Like, is it for you a very easy thing because of the digital approach?
Yeah, so for us, it is currently a direct-only digital-first approach. And the goal was that, when the joint venture was being planned, then the thought process at the parent level was that BlackRock has data-driven, technology-enabled products, and Jio has the digital reach right across the length and breadth of the country, right? Obviously driven by the sort of Jio telecom revolution at almost zero cost. So why not, use that reach? Because that reach sort of puts you almost at par immediately with the best sort of banking distribution channels as well. So it's quite large, but obviously to tap into that is not in the traditional way, and you need to have your own, methods and iterations to reach there. So which is why the digital first, and right now, digital mainly 99% digital only approach is there because that way, you can reach everyone that you want to. And of course, in the last many years, there's been a good, online revolution in terms of fintechs, both on the broking side as well as on the wealth technology side. The UPI, of course, we've seen what it's done, and there are platforms like PhonePe and Paytm and all, which are also getting first-time investors into the market. The online brokers, JioBlackRock, are getting a lot of first-time, investors into the market. So all of that has already been done, and given our own channels, our own app and reach, obviously we thought that, that is an interesting thing to fully understand. And of course, the initial response has been very encouraging. So the FlexiCap Active Fund that we launched, we had 4.5 lakh investors so quickly coming into it because of the digital angle. And in fact, overall, among all the schemes, we have around 8.5 lakh investors right now. And interestingly, more than 10% of those are first-time investors, right? So these are very powerful numbers in just a span of a few months. So that is what the digital reach can do, and we are also just learning, right, as we go along. As we launch a few more active products, we'll get a lot more data. We can study that, also figure out where that helps. So I think, distribution is important, obviously. We're not saying it is not. But we want to understand how much impact the digital can have, where what gaps it can fill, what gaps it cannot fill, and I think both have to go hand in hand. But when we talk of reaching the length and breadth of the country and really going into even the villages and other things, I think digital becomes very important. And, whether you have direct digital interface or even for a lot of people who would help you on the ground there, letting them have a digital interface also will become very powerful. So I think even distribution can be enabled using digital tools, and of course digital directly is quite powerful. So those are some of the things that we've initially seen, and is really helping in penetration. Obviously, what you need to do to be effective digitally is put a lot of content out there, right? So Navneet spoke about transparency and technology and training, right? And that is where, again, the digital helps you bring all of those together. Now, obviously, the brand name of JioBlackRock brings in the trust sort of almost automatically. But then to be transparent, to continue that trust, to give more insight into whatever you're doing, and what the good and bad things are, maybe in your product, being very upfront about it. I think we've tried to do that in the initial few launches. And then the training. So we've had vernacular language-based video content also out there for the FlexiCap. And I think that's something I've seen bits and pieces in the industry as well. But I think things like that is something that as an industry we can all do a lot more. And that can also help penetrate a lot, because you can't be just putting that content out there in Hindi and English and assuming that everyone across the country will understand. And then the content to simplify things, right? I think ours being more systematic and quantitative focused is actually going to be among the most difficult active products to really, educate people about. But I think we've had a good start with the first one, where we've really dumbed it down and tried to explain in very simple terms, relate to things like cricket, which everyone understands in India. And you'll have to give those kind of examples. Even Swarup was saying that, you need to talk their language, right? So I think that is very important as well.
Yeah. In fact, I think the revolution over the past 5 years has been driven by digital means. The number of distributors has not gone up in any way, in any dramatic way at least. Yeah. But the reach has gone up. So clearly it's through digital means that people are being...
One point I forgot to mention is, of course, the digital partners I mentioned. So, when we say digital first and our own channels, obviously our Jio app and our own website, but of course the digital partners are there. So Zerodha grows, we've got very good participation through them, because they make client money go into direct schemes. And for them, it's more an acquisition channel, and they need content. And we want to give more content. So it works very well that way.
Yeah. Although, of course, it does worry me that a lot of the platforms are not making any money off direct plans. The money is made through other means, through other products. There's a dichotomy that at some level regulator has to fix. But I want to just see if there's a counter view here in the panel, because clearly digital gives reach, right? Jio, गाँव में लोगों के पास app तो है, but does it solve for trust? Because if I want to reach somebody from Jio sitting in XYZ village, I don't know if I can do that, right? There's no human being who can explain to me which scheme to invest in, who knows my family, who knows my goals. Chitra, do you want to come in on that?
Yeah, sure. I mean, always happy to say, add on to that when you're talking today, I mean, even SEBI, the whole new drive, like what AMPI did in the past, that's supposed to happen, where we're talking about increasing the foot soldiers, right? So as Rishi said, in terms of number of MFDs, and even you said, that's not growing at an alarming rate, but what's the quality of them? Like, what is the mutual fund industry also doing in terms of training the so-called person who is in front of the client? What are they talking? Are they going and saying just product? Or are they really understanding what is it that the person wants? So, see, on the ground, yes, digital is very important, but whether it is insurance agents, or it is post office, or we are talking kirana walas, or we are talking chemists, everyone, eventually turning, also talking money to people, and people showing up there because they trust that person, right? The first level of trust is there. And then they go on to asking that ye karne se mera kya fayda hai? Am I going to land up losing money, or am I going to think about setting aside money for my child's education? And is this going to grow, and nobody is going to, again, scam me? Paisa bank mein to safe rehta hai, yahan se nikal jayega kya? So, just reiterating that who is there to do this entire distribution? So, manufacturing ho gaya, but distribution is trust-based, right? That trust, like, I agree that there is a brand name, but the person sitting out there doesn't know you. They don't know the brand name. It's going to take time for brand to get established and recall happening. That guy who's sitting in the village, that woman who's there, or whoever is earning that money and needs to come, it's a huge leap of faith to completely change and jump from the bank into wanting to come invest in a mutual fund. There has to be some different level of conversation happening there to explain to them that, listen, this is for you, and this is what the whole world is moving towards, and whole of India will be supporting. That language of communication is still not there, sadly. Yeah.
Before I start, let me make a disclaimer. I'm a huge fan of what Chitra does, and I really request all of you to look at the back end of the data they collect from the investor and put the entire wallet in their place. Okay. Now here's the but. Okay. If you look at the investment universe today, for the first time in my career, I am seeing 3 generations investing together. My father, me, and my son. Now, father belonged to a different environment where digital was still not there. We think we are digitally savvy, but we are not. But my son is a different ballgame. When you look at younger people from my generation onwards, they are not afraid of sharing their deepest of secrets online. And if you are expecting them not to have that same confidence and faith online on investing, is fundamentally flawed. You're also underestimating the ability of the machine to handhold you in critical processes of financial planning called review and rebalances. The machine can do everything. When the behavior of the next generation is more inclined to the machine, that's where you have to think. I'm not taking away the human angle at all, but don't underestimate the potential of the machine doing everything you can in a very unemotional manner. Finally, when you talk of the word discipline, it is also unemotional. You have to cut out all subjectivity. That for a human to do is also practically impossible. So when you look at the next 10, 15 years of the investing universe, these are things which you have to think of. I'm not drawing any conclusion. I'm just living behind a thought in everybody's mind.
One quick addition to that. So even the goal-based planning or target maturity, what Chitra was saying earlier, I think that also from a digital angle can help in designing those and doing the rebalancing and other things. So while humans are required, but I think some of these tools can really help, whether I'm fully digital or someone is distribution. We need a mix of these things.
Madhu,
Completely fintech.
If you can give us a cost from an AMC point of view and from a distributor's point of view also, you must be aware, talking to lots of MFDs. For a 10,000 rupee SIP, what does it take? can a 100 rupee kind of commission be worth anyone's time?
See, it is not worth, but we must look at the volume. And we have already heard that the penetration is so low. It's a complete blue ocean, and mutual fund are the best products. But, it has to be a mix of physical and digital. It cannot be only digital. In digital, we are assuming a human being who does not have cognitive bias, who does not have Dunning-Kruger effect, who does not have FOMO, who does not have any other those biases, psychological biases. So that is, I'm sure, not a single individual in the entire world exists. One. Secondly, we need to see, जब आप भारत की बात करते हैं, तो भारत में if a person is based out of Nasik or a person is based out of Tirupur, both cities have different languages. I as an AMC won't be able to communicate their language or understand the customized need they would have, which only a distributor can do. So मेरा मानना है distributor are the most important pillars for जो financial inclusion की हम बात करते हैं. Even if I relate to Viksit Bharat 2047, we have 4 pillars. 4 में से 2 पिलर आपके हैं economic growth and second is financial inclusion. ये दोनों में maximum contribution can come only through distributors. And as a millennial myself, I sincerely believe we are in a developing country. हमें ना वो जो सिखाया जाता है कि जो जी में आए करो, वो बंद कराना चाहिए और हमें ना पैसे कमाने में ध्यान देना चाहिए. तो एक क्या 70 पैसा 1% क्या बचा लेंगे हम? मेरा मानना है उतना टाइम व्हाट यू आर स्पेंडिंग ऑन ए डिजिटल प्लेटफॉर्म, अंडरस्टैंडिंग एंड ensuring that आपके bias नहीं है and you are taking the right decision, rather than doing that, let the distributor whom you trust do that job and you focus more on making more money.
Sure, but if you can give us the cost from distributor's point of view or AMC point of view, how is it going to be, like, even for distributor they have to have an employee, that employee is 1 hour of time, is it worth that 100 rupee commission?
Commissions, तो देखिए, sir has to play an important role there because he's part of MP. I would say commissions बहुत कम है sir. I would say SEBI को बोला जाए, we need to increase the commissions. Otherwise, at least 50% तो penetration हो जाने दो. Then we can think of reducing the TR and all. Distributors, और आप देखिए, मैं 4-5 डेटा और देती हूँ इसी में. One is most of our distributors don't have a website. They are not visible. हम क्या compete करेंगे wealth RM से या bank RM से. Second, most of our distributors are running a mom and pop syndrome. Right? They focus only on your compliances and services. They are not strategy, sales and innovation focused. Third, we have heard they are not digital at all. Now in our NFOs, we received 50% of money from B30. And we received major chunk from physical forms as well. तो आज भी हम उस पे है, तो अभी तो बहुत a lot of gap is there. And I'm talking of Bharat as of now. And last में आप देखोगे distributors, they are doing such a noble cause. Right? Savings to investment, हम कितनी भी बॉम्बे में बैठ के बात कर रहे हैं, actually it is happening at the ground level, at the pin code and at their local language. वो जो इतना काम कर रहे हैं, are they actually valued properly? Most distributors are losing their market share. We saw the data, 42% जो individual traditional distributors का share है, has come down to 27. Whereas this should increase, and only the reason is, ये 4 reasons जो मैंने बताया, they are not professionalizing their setup, number 1. Number 2, every distributor talks of asset allocation, and I always tell them, आपके खुद के company में और whatever proprietorship firm में asset allocation missing है. हम GST की बात करें, हम tax की बात करते हैं, एक individual distributor 5-5 ARN लेके काम कर रहा है, So what are we talking? अभी बहुत gap है. अभी तो मेरे को लगता है और distribution जो active distributors हमारा मानना है कुछ 30 से 50,000 नंबर है. सर वुड नो बीइंग अ वेटरन, बट अगर उतना माने, दिस नंबर हैज़ टू गो, एटलीस्ट एक्टिव नंबर्स हैज़ टू गो बियॉन्ड 5 lakhs. देन ओनली जो हम मीनिंगफुल भारत इंक्लूजन एंड बात कर रहे हैं, दैट वुड हैपन.
Neil, here's my argument. You set up any business ना, आपको एक पूंजी लगता है. This is the lowest entry barrier business. You say go to any other business, आपका एक capital लगेगा. राइट इसमें कुछ नहीं, को एमफी का आप एक फ़ी देते हो, एक एग्ज़ाम पास कर लेते हो एंड यू एंटर द बिजनेस. द फैक्ट दैट विदाउट एनी कैपिटल यू आर एंटरिंग इन दिस बिजनेस इटसेल्फ हैज़ एन अपॉर्चुनिटी कॉस्ट. नाउ सेकंड, इफ़ यू गेट इनटू एट द बिगिनिंग लेवल, हमारा धंधा है पैसा लेने का, पैसा मना करने का नहीं है. हाउ डू यू एज्यूम दैट द पर्सन हु इज़ गिविंग यू अ 10,000 रुपीज़ SIP टू स्टार्ट विथ हैज़ 10,000 रुपीज़? By saying no to that 100 rupees, you do not know what these opportunities will go to, right? And it's a process of trust. First day से वो पैसा नहीं देगा, कितने family members होंगे, right? So I am not a fan of saying no to any money. For me, who is premium? The person who considers me as premium is premium. Even if that person has, and you check that, I've been 30 years in the industry, I view a distributor not on their AUM with us, but in the way we do the partnership. Right? For me, if somebody has 100 rupees of AUM, gives me 20 rupees, a bigger partner than somebody who has 2,000 crores of AUM does not give me rupee. Right? But saying no to any money can be very fatal. Because what is the ultimate outcome, you do not know. And anybody who says no to money in this business does not deserve to be in this business. My sorry for being upfront is the basic submission. अब चालू तो करो एक जर्नी, वो किधर जाता है you never know. हमको थोड़ी ना पता कि 2 लाख करोड़ एएम लेके आज बैठेंगे. 400 करोड़ से चालू किए थे, होते होते कुछ बन गया, राइट? और यहाँ से सोच रहे हैं कि 4 लाख कैसे बनेगा. 5 साल पहले मुझसे ये पूछते तो मैं बोलता कि तुम्हारे मुंह में घी शक्कर थोड़ा मैं खाना लेके जाता हूँ कि 2 लाख रुपए. That's how it builds up, right? But don't say no to any money irrespective of what you want. There's only one rule in this business: what is right for the customer is right for us. वो लेके चलो. यहाँ से क्या बनेगा in the next 10 years आपको खुद नहीं पता.
So commission level you are okay with, right?
Yeah, I mean, finally I'll tell you the maths. Okay, let me give you the maths. In this commission चक्कर क्या हो रहा है? 1,34,000 ARNs हैं. 1,32,000 below 100 crores. आप उनसे पूछोगे वो बोलेंगे नहीं हम डेट नहीं करते क्योंकि उसमें हमें कुछ मिल नहीं गया. Now look at the difference between the 100 crore distributor and the 500 crore distributor. 500 crore distributor sells 60% equity. 100 crore distributor sells 82% equity. Because he or she says कि मुझे उधर कुछ मिल नहीं रहा है. अब उधर ना suppose non-equity में zero भी हो गया ना. So for 200 crores, the person does not earn anything, but by that process increases the wallet share and takes the earning of equity to 300 crores. That's the business. Business is not about what you earn in one particular asset class, is how much of the wallet share you own in. You can only do that by selling all asset classes. Normally, and it's a very open thing that I'm saying, कोई secret नहीं बता रहा हूँ. You talk to the 100 crore guy, he will say कि नहीं उधर कुछ नहीं मिला, मैं क्यों करूँ? अरे मैं ETF क्यों करूँ? उधर तो कुछ नहीं मिल रहा है. अगला गोल्ड ETF छाप रहा है इन्वेस्टर. आपका मिस हो रहा है तो क्या करोगे आप? Right? So if you don't increase your wallet share, your earning will not grow. It's not specific to an asset class.
Chitra, you want to comment on that?
Yeah, so I wanted to add on to what Swarup said, that yes, definitely one is the wallet share, but along with what Madhu said, in terms of cost, what you were asking, as we grow, as the numbers keep on hitting large, the amount of technology that's going to come in, the number of fintechs that are selling out there, even we are a fintech, right? So Happiness Factory has the entire platform that talks goals. We don't allow people to invest till they do the goal-based plan completely. Otherwise, हम छोड़ ही नहीं है. Now, how can we do that en masse? That's the way to go. Then, how do you manage cost? It's possible because you're able to handle mass volume on pure tech sitting in one remote corner. Like he said, there's no entry barrier. But if you do it right, then that 10,000 rupees, it's meaningful for that person. And then you know that, no, the wallet share is a lakh. And you know, you go do it properly, it will move. It will obviously help the distributor also, the manufacturer also, and the investor. That's all I wanted to add.
Okay. Now, Rishi, let me bring you on technology, because one of the most promising technologies flowing into wealth management today is account aggregator. The ability to see all of your assets in one place, click of a button. Many bank apps are starting to offer this. I think you guys have already announced that it will be there on either the wealth management or the AMC.
Yeah, that's the WMC side.
Yes.
Not WMC.
Right. So, do you think that can be a potential leg for further expansion?
Yeah, definitely. I mean, obviously it brings in better risk profiling, breaks out a lot of the frictions that are there typically in terms of KYC and other things. If you can see the entire, earning, investment, saving kind of thing together, then obviously you can design or do the asset allocation or suggest more products or do the goal-based planning, etc., much better there. Of course, for us, from a technology standpoint, what it enables is that you can maybe do personalized nudges, right? You can figure out based on specific use cases, specific individuals as to what kind of nudges should go from using technology on the app, etc. So from that perspective, I think it can obviously be very good for the entire industry. Even otherwise, on the digital side, a couple of points I made earlier relating to this point. Another thing is that the combination, right? So for example, our distribution was entirely digital and, some interesting numbers which I shared earlier. One thing which I forgot is, of course, we got investments from more than 90% of India's PIN codes, right? So when we're talking of inclusion and Viksit Bharat and all that, obviously that it's shown that impact in like one fund launch, right? Which is not so easy using the entire distribution that is out there. Again, as I said earlier, I'm not saying this or that, I'm saying both are useful, but even to what some of the panelists have said, I think even for regular distribution, if that digital layer is there, right? I think that will be very powerful is what this kind of data is showing basically. And then for us also the last mile, and that comes back to the account aggregator thing. So, all those things will enable this adoption much faster. But having said that, even what we saw is that in the last leg, there are a lot of drop-offs and other things that happen, right? And there, going back to what Chitra said earlier, that people do need support to, be able to navigate that.
If I can give you a classic example, today, a lot of people in India shop on Amazon, but try finding the customer care number on Amazon. You just can't get it. It takes ages to find it.
Yes. Exactly. So what we did is we had a call center and a customer service center. Whatever drop-offs were happening digitally, you are tracking that very closely. And then there were people calling back. So when we are saying digital, we are still having that last sort of phygital layer, if you want to call it. So that can be quite powerful as well.
Okay.
I wanted to add that absolutely, because first is the investor gets to also, you get to see FDs and you get to see everything under the sun that the person is invested in, which is lacking today. And that's one of the biggest tasks that, or rather we keep it as the agenda priority.
Right. Chitra, on that point, I want to just bring in one area of debate and somewhat of controversy in the industry, which is that mutual fund distributors are not today part of account aggregator. They are the largest workforce out there in the industry, and the workaround that they had found, which was MF Central, and that report has been discontinued by AMFI. So now you don't have visibility on the other mutual funds of a particular client. So any input on that? How do you as a distributor, do you think SEBI should amend the rules?
It is with permission. So right now everything is happening with permission from the client, right? You cannot do it directly without. Of course, there are some, such people, our peers who are doing it. But yes, to enable in terms of data privacy comes in here or not, I don't know. But still, to take permissions and to get everything reported together where it is for view for the client as well as for us, and hence enabling them to take better calls based on their goals is obviously the right way to go. Pulling back and not being able to access was done for specific reasons, right? It should not be misused. If misuse is happening and there is some kind of abuse happening, that's not right. Everything has to happen with proper, the right systematic way. I think Swarup can add that.
I'm so happy that Chitra as a distributor pointed this out. The data has to be used, not misused. And when it is misused, I'm so happy that AMFI came in and took the rightful call. Go to the root cause of it, then you will know where it was misused. And it was misused to what limit? Yeah. Right? At the gullible level of a client. Then AMFI has to come out and safeguard not only the industry, but the client at a fundamental level. And I'm so happy and proud that AMFI took this stand.
Okay. Any contrary views, Madhu?
On mis-selling only, so we have seen sales लोगों के लिए बहुत बढ़िया tool है. I'll come to you and say all the mutual funds you have taken are all bullshit. I'll show you the best product. So I think that had to stop. And second is data privacy. Not every HNI is okay with this, and so that's where whatever has been done by our regulator, we completely agree with it.
Okay.
One quick point I want to mention there was that, see, I mean, again, using digital, it becomes more standardized. So you can standardize a lot of communication, not leaving it to chance. You know, 4-5 of us reading the same thing may go and say very different things. That is how the mis-selling sort of starts. So that is where, again, digital means of communication at least helps standardize things and avoid a lot of mis-selling.
Okay, finally, we are almost done, but I want to make a quick segue into when we talk about Bharat, we often leave out a very big part of Bharat, which is Indians who live abroad, which is NRIs. And India has created a mechanism for them to invest in India because the normal route is so painful. It's almost discouraging for NRIs to invest in India with NRO, NRE, PIS, etc. So GIFT City is the solution. And if I could bring in Swarup on that, where are we today with GIFT City? What is needed for it to take off?
I think Gift City has been a learning experience for us. I think the first learning that I got when I went and met some of the Indians abroad was not these procedural problems. It was, giving them their investment in their currency. A person earning in dollars will not invest in rupees was a very harsh learning for me because I thought I had a fund. But they said, you might have a fund, but it's not the way we invest, right? And that's where Gift City came in and did its own bit. And from the day we opened Gift City Fund, our Dubai office is getting money every day. And that changed everything. Yes, the power of a single window regulator is there. And then the intent to make things happen is so refreshing to see, and it's learning by the day. It works hand in hand with all the partners, and I think the journey so far has been pretty good.
Right, but Swarup, can you tell us why retail funds are not coming out? There's only one retail fund in GIFT City, inbound and outbound.
I'll give you our personal thing is that, we feel there's a long way to go on the operational side. I mean, I think the operations itself has its own bottlenecks, and I think the back end has to really scale up for us to provide retail funds. It's easy to provide one, but we don't want to goof up after that. So we're taking it one step at a time. I'll give you our reason. I'm not the right person to talk, but from our end, we have to gear up the operation side far more to be able to service people at a retail level.
Madhu, any quick thoughts on GIFT City and NRIs?
No, it's a very powerful tool, but like as Swarup rightly mentioned, retail comes with a lot of operational challenges, and being a salesperson, मेरा मानना है बाहर तो इतना पैसा कमा रहे हैं वो, so why to take retail? So we have gone the AIF route where we taking much larger corpus from them. And secondly, GIFT City has taken a lot of time, but it's catching up in a very big way. With our AIFs also, we are seeing a lot of money coming in, and in the right time, you have this Bharat story, being played so beautifully.
But if I may, Bharat also resides outside India. So a lot of workers in the Gulf, they don't nowhere close to 1.5.
So I meant Bharat means India, suddenly we all are so bullish and confident on that next decade, the kind of money Indian equity markets would make. That's why we are seeing a lot of traction. And but yes, we definitely at our AMC, we are going not the retail way, but the other route we have taken.
But hopefully you will...
No, we are planning the retail, but we're just gearing up the back end. Another thing is, if you ask for 250 rupees, the person will give you 250 rupees.
इसलिए ज़्यादा मांगो ना सर.
Mango.
All right. So let me now open it up to the audience as I promised. Please raise your hands. We'll get a mic across to you.
Neil, I wanted to add one thing.
Sure.
About, the whole Bharat ka thing, which I think if anybody else in the panel also would like to add is, see, we, adding to what Navneet also said, we are savers for sure, and we're talking about the retail people coming in to save. One big area where I would request everyone to focus in terms of literacy is going after the woman, to get in engage women in the interiors, and they are the lady who saves that money in her burning of rice is the same person whom we have to talk to say that, listen, do this, because not only will it remain like that, it will also add some more and become larger. If we can do, educate and do all of the literacy drive towards women and focus more on that, then we see that rural India also, the entire family and the children therefore will understand mutual funds much faster.
Chitra, if this panel happened 10 years ago, this would be 5 men. The fact that It's not two women, it's just showing
So
the
happy
progress
there are two women?
Yeah, it's just it's happening, I must tell you, and it's the best
really,
thing that could have
Thanks
happened.
to Bombay Chambers.
Please raise your hands. Okay, one at the front.
Hello. Yeah, so basically, I was just reading this report from Amundi Research. They just recently, came out with numbers wherein they have seen that with the rise of income, the income levels are rising. The discretionary spend is rising. We are not worried about essentials anymore. It is more about, discretionary. So we want to, go for luxury things and everything. So we have seen the spending has, increased in all the luxury segments. Like people want to buy a better car, better mobile phone. They want to have more appliances in their house. While the saving and investing has not, picked up the pace. So that's a human behavior. Once we have more money in our hand, we want to spend more, and then we think about saving and investing. So that's the one thing. And second thing which I wanted to relate to this is, I'm a mutual fund distributor. I'm an independent mutual fund distributor, and I'm into this business for quite a long time, and I have my own, learning experience. And you talked about the cost of, running this business. So obviously, physically, we have to be present in front of our clients, and at the same time, if I have to scale my business, I have to use the technology also. I have to have, execution platform. I have to have an app, client-facing app, and then I have to have a, social media presence as well. So everything has to be taken care by me. So now SEBI is continuously bringing down the expense ratio, So it's getting really difficult for us. And mutual fund is the most transparent product we have for the middle class families.
Can you tell us the cost of an hour of your time? So what?
So
what
I
level
don't, break down my cost to, how many, what is the cost of my hour. I'm mostly, clients focused. So I have investment from very HNI clients as well. And I also take investment from daily helpers also. So I have a SIP of 500 rupees as well, and I have a SIP of 5 lakh rupees also. So I'm catering to all the communities. And I also participate in financial literacy. I recently did a session for the children on how to, have the healthy money habits, raise some healthy money habits. So my question is this, that with such a structured product, the cost has become, such a, debatable topic, while there are a lot of unstructured products which are more riskier, whereas the brokerage is still so high, and, regulator is not bothered about it. So how do you think that as a mutual fund distributor, we want to focus on the client, we don't want to focus on the product or the, which fund we are referring. I have never looked at the expense ratio. But again, that's the bottom line.
Swarup, do you want?
First of all, it's wrong to assume that the regulator is not bothered. That's a very strong statement. The regulator is doing its bit, okay? And I've been tracking the regulator in a very intense manner, if I have to say, for the last 20 years. Intense manner, right? And then the way it's gone about structuring, and forget other products, the way it's worked towards making our product what it is today is something which I mean, I'm so happy that I represent this product and not other products, right? That's something which you have to give credit. Don't conclude so soon on what the regulator will do. Okay.
I'm not concluding. I'm just putting up my pain points as a distributor.
But here's the reality. You take any business, a business will scale, will always have cost pressures. In every product that you use on your phone, all those products are available to you free. Think about it. Why should the customer pay you some money? Is something we should start thinking as on yesterday. Because all other products from Google to Uber, I get a car, but I don't pay Uber anything, right? I used to pay, but now I'm not. How do we move to that remuneration structure and inbuild our business plan is something which you have to gear up for the future. And that's where it is. I mean, whether you like it or not. The remuneration is formed on two parts, or the costs are formed on two parts. One, the part the regulator decides, one part the market forces decide. Let's look at equity and debt, and Nilesh Bhai is here, and correct me if I'm wrong. The TER of the debt fund and the equity fund are the same from a regulatory perspective. While the TER on the equity part, we are on at a different level, but the return potential is there. But on the debt side is a market force. Like मांडवाली चल रहा है, ना आपका ना मेरा, इतना पे चलाते हैं. That is when the market forces come in. How do I know what the market forces will be tomorrow? But a good footballer is where the ball is. A great footballer is where the ball will be. If you are a great footballer, then anticipate these changes and build those cost structures internally and not be taken by surprise when these things happen. We run 2 TRs every day. And last time the TR cut happened, our NAV went at 7 o'clock. Because we run 2 balance sheets, 0.25 and 0.5. कल को कटेगा अपने, see, there are 2 types of people, lawmaker, law follower. I am a law follower. I have no, and more I discuss law, the more I waste time. Because मैं कुछ नहीं कर पाऊंगा. मेरे हाथ में क्या है, 2 balance sheet चलाना.
So that's what we are doing.
Yeah, so run it. Concentrate on increasing wallet share.
So वही कर रहे हैं.
बस control
This
the
is how we are
controllables.
surviving.
Yeah, absolutely.
What you said earlier was very true, that the discretionary spend that's going up. So the only thing that we can keep doing is having better conversations, which I'm sure you're doing at your end, and just helping and guiding all your HNI clients in terms of what you're doing for your tomorrow.
Okay, I know a client who does all her discretionary spending from Chitra's Excel. Let me tell you. Okay, very dear friend of mine, if she wants to holiday, there's a girl called Jyoti who works with Chitra. Jyoti pays her the money. Become that, and it'll be a very different. Correct me if I'm wrong. Yeah? She knows the person. Very dear friend of mine. But that's the power that a distributor can do. Every discretionary spending. She does 3 holidays a year, let me tell you. Young girl, now retired, given up her job, is moving around the world, bindas. Kabhi bhi dekh rahi ho to ghum rahi. But all the checks come from them. That she doesn't know that I know, but I know.
But yeah, going deeper into planning is the only thing that can help in terms of educating those clients who are not thinking about their tomorrow at all. So we say that, what you're sacrificing your tomorrow. You're sacrificing your today based on, using everything of tomorrow. What will happen then? Will you outlive the money or the money outlive you?
Right. Swarup and Madhu, if you can come in on the recent proposal by SEBI to further cut expense ratio by 10 to 15 basis points, does this unfairly penalize the larger AUM schemes more, and will it lead to yet more launches of thematic?
Here I'll make a disclaimer. Honestly speaking, I'm MFAC, so I'll refrain from that. It's still under consultant space, so there's an obligation or not. I can speak, but after I'm not MFAC, I'd rather speak.
Madhu?
It doesn't impact the new AMCs because we are just building up, and it gives us an option, to improve our efficiencies also. So as of now, we are not, I would say, bothered about what will happen.
All right. Maybe we have time for one last question and we have to wind up. Just raise your hands and, yep. Yes, in the middle.
So everyone's excited about the growth opportunity this industry has for us. On one end, we have Jio, which is like full digital. And like you said, ma'am, a lot of your NFO in FlexiCap came through forms. So, and distributors are worried about cost, right? So how do you see, or what is a general number in terms of average AUM where you see that a distributor can start doing both of the phygital and digital? Because a lot of things in the beginning will be his own learning. He takes a lot of time. So with your understanding, sir, since you've been doing this for 30 years, what would be a general life cycle of a distributor?
General life cycle of a distributor is perennial. Okay. But the only controllable that you have is your cost. You have to run that very sharply. Since you asked that question, let me tell you, at Mirae Asset, we broke even at 660 crores. If I say that, you will not believe me. But if you have a control on your cost, anything is possible. That means we had to mitigate our salaries to a certain level, our office cost to a certain level. Everything was mitigated. Down to our travel, where we stay, what kind of cars we hire, everything. Because we didn't have a choice, we had to survive. Those were the days. If you look at those days, there were more global players exiting India than staying. When I say this, I also find it difficult to believe that we are the only organic, 100% owned global asset manager. That's how ruthless this space has been. So you have to control your costs at a very, very ruthless level to break even. And here's my thing that, one, we talk about SIP for the client. What is the SIP for you? Your SIP book should be generating income for your business. That should be a first target. Once you are clear of that, then you are free to express yourself in a very different way. From a business owner perspective, at Mirae Asset, we run our own SIP book. I am around 920 crores. At 1160 crores, I break even on my fixed costs of my book. That's how I run it. At 1160 crores, मैं बहुत अलग आदमी बन जाऊँगा. कुछ भी कर सकता हूँ. मेरा cost तो covered हो गया. So how do you look at this business from a business perspective? Is a different angle. If you have another hour, we can take a separate session on this. Yeah. But my only thing is run your SIP book to fund your business costs.
So एक just 45 seconds. पहले तो ना अपने आप को डिस्ट्रीब्यूटर समझना बंद कीजिए आप लोग डिस्ट्रीब्यूशन आपका रोल है बट आप एक्चुअली एंटरप्रेन्योर्स हो तो जब आप एंटरप्रेन्योर की तरह सोचोगे यू विल बी एबल टू ग्रो योर बिजनेस यू विल बी एबल टू टेक केयर ऑफ योर कॉस्ट यू विल अंडरस्टैंड एसेट एलोकेशन ऑफ योर ओन बिजनेस एंड यू विल थिंक ऑफ हाउ टू ग्रो 10x. तो सोच इट्स ऑल द माइंडसेट बदलेगी तो दिस इज द मोस्ट ब्यूटीफुल इंडस्ट्री.
Chitra, any last words? As a distributor, what is your threshold level of break-even?
I would just like to add to what Madhu said and to what the gentleman said that, invest in terms of skilling. The more you skill and the more sharper your people are, that's all that matters. Because I've seen just 2-member teams doing fabulous business. The going is rough initially, but stick on there and have a fantastic value proposition. That's all that matters. Automatically your clients will talk about you and you will reach your book. And yes, as Swarup said, SIP plays a huge role. But yeah, it depends on where you are and what costs you're incurring right now. Yeah. All the best.
All right. Thank you, everyone. Thank you so much.
Thank you so much, everyone, for that insightful discussion. I now request Nilesh Shah, past President, Bombay Chamber, and Chairperson, BFSI Committee, Bombay Chamber, and Group President and MD, Kotak Mahindra AMC, to please... Ma'am, just a request. Yeah. To please present mementos to our panelists as a token of appreciation. Madhu Lunawat, Founder and CEO, The Wealth Company Asset Management. Swarup Anand Mohanty, Vice Chairman and CEO, Mirae Asset Investment Managers Private Limited. Chitra Iyer, CEO, MFA Capital. And Rishi Kohli, Chief Investment Officer, JioBlackRock Mutual Fund. A round of applause for all our panelists. Thank you so much, everyone. I request everyone to please be on the stage for a group picture. Thank you so much, everyone.